Let's begin the show with intraday market numbers. And here in Africa, major markets were positive, with the JSE index in South Africa jumping 7.50% as the Reserve Bank announces new liquidity measures. In Nigeria, the index traded positive by 0.21%. Egypt closed for the week positive by 5.13% on Thursday, while Kenya closed negative on Thursday. And most markets in the Middle East reversed losses to close the week higher on Thursday as measures by the region's central banks calmed investor nerves, while higher oil prices also aided sentiment. In Abu Dhabi, the index slipped 8.41%, with First Abu Dhabi Bank surging 14.9%, its biggest intraday gain since June 2016. Dubai's main share index added 2.85%, with blue chip developer Emma Properties soaring 12.1%. In Saudi Arabia, the benchmark gained 1.83%, led by a 3.9% increase in petrochemical firm Saudi Basic Industries. Only Qatar's index retreated 0.98%, snapping 4 days of gains. And in Europe, markets bounced on Friday morning after a volatile week as central banks and governments around the world adopt a whatever-it-takes approach to mitigate the economic hit from the coronavirus pandemic. Okay, let's cross over to Frankfurt now. Chelsea Dolani has more to tell us. Hello, Chelsea. Good afternoon. We've seen European stocks bouncing back today. What's the mood like in Frankfurt?
There's definitely a sense of cautious optimism as we head into the weekend. It's obviously been a really brutal last couple of weeks for investors. Even with the DAX up about 4% right now, it's still lost more than 30% over the past month and about 20% in the past 2 weeks. And I think investors are certainly not thinking that that this is going to be a long-term market bounce back at this point. The threat of the virus, the spread of the virus remains a huge problem for the global economy. We're already seeing firms here in Germany insolvent. We're obviously going to see millions of people lose their jobs, but the moves by central bankers have been really stunning over the past 5 days. We've seen 31 central banks come out and cut interest rates, and just trillions of dollars worth of stimulus coming down the pipeline from governments around the world. So I think that's finally reached the critical threshold to make investors believe that if we do see an economic contraction, it won't be a crash because of these measures.
Now, the U.S. is considering intervening in the oil price war between Saudi Arabia and Russia that has wreaked havoc on global crude markets. What impact is that having on the oil market as at today?
It's having a pretty dramatic impact on the markets. Yesterday, as these reports started to break, we saw oil prices have their biggest daily gain ever in the U.S. They were up about 25%. Brent, the global benchmark, rose about 15%. And today, oil prices are just adding on those gains. It's not exactly clear what methods the U.S. is considering at this point. They're talking about diplomatic pressure on Saudi Arabia, but also potentially imposing sanctions on Russia to help or to sort of encourage them to also participate in a dialogue about production cuts. So this also comes as the U.S. itself is considering cutting its oil production, which they haven't done in decades. So I think there's a lot of evidence that we could be getting closer to some sort of agreement on oil cuts. But at the same time, firms in the U.S. will also be cutting back. So that should help with the supply-demand issue in the oil market.
And in Germany, the number of coronavirus cases is nearing 15,000, but the number of deaths is far smaller than in other countries. How do experts explain the low fertility rate?
This has been, a big topic of discussion here in Germany, and a bit of a head scratcher for a lot of health experts. But the explanation that a lot of people give is that, for one, Germany has a much bigger testing capacity than a lot of countries right now. They're conducting about 160,000 coronavirus tests every week. That's more than Italy has tested in its entire period of trying to slow the virus. That's also just drastically bigger than the U.S. or the UK. Most other countries just don't have the same capacity at this point. So that's helping officials sort of determine who has it and get them health care early on. But there also is a lot more, the rate of infection among younger people is also much higher here. So coronavirus is obviously a lot more deadly for older people, but the rate of infection among young people has been quite high here. And one reason for that is potentially because a lot of these younger people got it coming back from skiing holidays and were traveling abroad, so they were already more active and they tend to be healthier. But at the same time, experts are cautioning against reading too much into this low death rate in Germany, because we're really just at the first stage of this virus, and as it progresses, as it spreads more, this is obviously going to lead to more deaths. So I think health experts are quite cautious on that.
Well, Chelsea, is another weekend. Let's continue to stay safe and enjoy the weekend. In the UK, the Bank of England cut interest rates to all-time low of 0.1%, and that drove some positive sentiments in the market. Let's cross over now to our London studio, where my colleague Juliana is standing by to tell us how the markets are faring at this time. Hello, Juliana. Good afternoon. Well, investors welcomed the latest emergency action from the Bank of England, and we saw equities and the pound rise sharply this morning when we discussed. Are those positive sentiments still holding momentum?
They are. The FTSE is in positive territory. It opened with a bang, and it is, alas, still in positive territory at intraday, which is pretty unfamiliar territory for traders in London. The all-share is up 3.16%. The FTSE 100 also up by 2.44%, and the FTSE 250, the domestic market, is up by a whopping 6.68%. In currencies, the pound is also up on the dollar by 2.67%, up on the euro by 2.33%, and up on the Japanese yen by 2.08%. Travel stock, that's back in demand again. EasyJet, that's that budget airline, up by 20% at intraday, and international IAG, the BA mother company, that's up by 11%. Also as well, WH Smith, that's a retailer that's really struggled. It's kind of come off the high street. It's mainly placed in airports these days. Their shares at the moment are up by 11%. They lost about 2/3 of their share market value when this COVID-19 started hitting airports. And also sportswear retailer JD, they're up by 19%. So positive territory at the moment. Let's hope that ticks on next week.
Let's hope so. Anyway, we've seen more action from the Bank of England today, this time relating to banks. The BOE has cancelled this year's stress tests, saying it may be hard to implement new global capital rules at this time. How are lenders and the banking stocks reacting to this?
Well, they're all pretty happy, really. These stress tests are Basel capital rules, basically trying to really regulate just how the banks are able to cope with a crisis after what happened in 2007 and 2008. They want to reduce increasing bank liquidity and decrease any issues that they may have. Now, last year, when the regulators stressed the top 8 banks in the UK, they did pretty well, basically showing that if there is a recession and a deepening recession, are the banks able to cope much better than they did in 2008. We passed that test last year. So the regulators here, of course, including the Bank of England, are pretty happy that they can cope this year. So they've cancelled all the tests because, of course, a lot of the banks at the moment are trying to look after their customers, not looking at what they're doing internally. But also as well, the outgoing Bank of England Governor Mark Carney, he also wanted to test banks to see whether or not they can adapt to climate change. And that was really one of his staple outgoing presents to banks. And that's also going to be cancelled. It's due to take place next year, but the banks don't feel there's going to be enough time to prepare for it. So in terms of banks, I think they're pretty happy with that result.
Well, I guess it's been a tumultuous week. What's the outlook for next week?
My goodness, I don't have a crystal ball to let you know what exactly is going to happen next week. But in the UK, of course, the big story is going to be school closures. This is going to affect thousands and thousands, in fact, millions of people. Of course, children, a lot of parents are wondering what exactly they're going to do to keep them occupied. But it'll be interesting to see once schools do close on Monday, just how this social distancing works. A lot of people are not happy that some people are not adhering to the measures that Prime Minister Boris Johnson is trying to ask people not to do. But of course, if your children are at home, then potentially you cannot go to work. So hopefully we could see a decrease in the amount of cases that we will have. We haven't spoken about Brexit a lot, but Brexit, of course, is dominating some parts of discussions at the moment because the EU's chief Brexit negotiator, Michel Barnier, does have coronavirus. He has COVID-19. He's said that he's self-isolating. Bearing in mind, he is an elderly French politician, so a lot of people are sending a lot of love his way. And then we've now heard that Liam Fox, our Brexit negotiator, actually Frost, sorry, I got his name wrong, he's also showing symptoms. So a lot of people are asking, are Brexit negotiations going to be on hold? There is legislation that says it cannot pass December the 31st, but there are some suggestions that we may have to actually extend that and stay in the EU, Chimmy.
Well, I guess it's going to be all about COVID-19. Anyway, let's continue to stay safe. Enjoy the rest of the weekend, Juliana.
Thank you, Chimazay.
And stocks in Asia Pacific rose on Friday as China kept its loan prime rates unchanged. South Korean stocks, which saw heavy losses on Thursday, jumped as the Kospi advanced 7.44%, while Hong Kong's Hang Seng Index rose 3.97% as of its final hour of trading. Mainland Chinese stocks also edged higher on the day, with the Shanghai Composite 0.47% higher, while the Shenzhen Composite adding 0.16%. Over in Australia, the ASX 200 rose 0.7%. To close at 4,816.60, with the heavily weighted financial sub-index up 3.56%. Overall, the MSCI Asia ex-Japan index gained 4.32%. Markets in Japan were closed on Friday for a holiday. And U.S. stock futures turned around early Friday morning, pointing to opening gains after stocks managed to notch a positive Thursday session. As of 5 a.m. Eastern Time, Dow Jones Industrial Average futures were up 846 points, implying a gain of more than 783 points, while S&P 500 futures and Nasdaq 100 futures also pointed to opening gains for the indices. Stocks rose on Thursday, with the Dow rising 188.27 points, or nearly 1%, to 20,087 points, while the S&P 500 was up 0.5%, while the Nasdaq Composite outperformed with a 2.3% surge. And oil prices rose on Friday as the world's richest nations poured unprecedented aid into the global economy to stop a coronavirus-driven recession. Brent crude futures were up 6.3% at $30.26 a barrel, while U.S. crude futures rose to $27.17 a barrel. Both U.S. contracts gained more than Brent because of U.S. plans to buy up to 30 million barrels of crude for its emergency stockpile by the end of June. And in precious metals market, gold prices rose 1% on Friday as safe haven buying offset a rush for cash amid fears over the economic hit from the coronavirus. But bullion was headed for a second weekly drop as investors sold the metal. Spot gold rose 0.8% to $1,481.30 per ounce, while U.S. gold futures climbed 0.5% to $1,486.50. Among other precious metals, palladium rose 0.5% to $1,660.30 per ounce. Platinum jumped 3.1% to $604.66, while silver gained 2.6% to $12.42.